Can a U.S. director sign Canadian tax returns? Once a U.S. company sets up a Canadian subsidiary, a practical question comes up quickly: who actually signs the Canadian tax returns? Many boards are filled with U.S. executives, and they want to know whether one of them can sign on behalf of the Canadian company or whether the signature must come from a Canadian resident. The answer is that a US-based director can usually sign Canadian corporate tax returns, but that does not mean the role is risk-free or that signature rules are identical to those in the United States. Who is responsible for filing in Canada? Canadian corporations are required to file tax returns in their own name. The returns are typically signed by an authorized officer of the corporation, such as the president, a director, or a chief financial officer. The signature confirms that the person has authority to act for the corporation and that, to the best of their knowledge, the information provided is correct. Canadian tax law does not insist that the signatory be resident in Canada. It focuses on corporate authority, not residency. If a U.S. director or officer is properly appointed and authorized under the company's internal rules, that person can sign. Board authority and internal resolutions. Before a U.S. director signs Canadian tax returns, it is important that the company's internal records clearly grant that authority. Corporate resolutions or banking and signing authorities should spell out who can sign tax filings, financial statements, and other official documents. In many groups, the board delegates signature authority to specific officers, such as the Canadian subsidiary's local manager or the group's global CFO. If a U.S. director is acting as an officer for the Canadian company, their appointment and role should be recorded so there is no ambiguity if questions arise later. Liability and duties of directors. Even though the signatory does not have to live in Canada, they still carry duties and potential exposure under Canadian law if they serve as a director. Directors have obligations to oversee the company's affairs diligently, which includes ensuring that proper records are kept and that tax filings are accurate and timely. Canadian law can impose personal liability on directors for some corporate tax debts, especially unremitted payroll withholdings and certain indirect taxes when they have not exercised due diligence. Signing returns without understanding what they contain or without adequate oversight of the underlying processes can be risky regardless of where the director lives. Practical challenges for U.S. directors. A U.S. director signing Canadian tax returns has to bridge differences between the two systems. Terminology, forms, and deadlines differ from U.S. filings. To sign confidently, they need reliable support from Canadian accountants and internal finance staff who understand the local rules. Time zones and travel can also matter. If returns are finalized close to the deadline and the signatory is in a different country, arranging signatures can become a scramble, especially if physical signatures or secure portals are used. Many companies solve this by appointing a Canadian-based officer as the routine signatory, even when strategic control remains with U.S. directors. Using professional representatives. Canadian tax rules allow authorized representatives, such as accounting firms, to file returns electronically and communicate with the tax authority on the corporation's behalf. The ultimate responsibility still sits with the corporation and its directors, but day-to-day interactions and technical filings can be handled by professionals. In practice, that means a U.S. director may sign an engagement letter or authorization form, appointing a Canadian firm as representative. The firm then manages preparation and electronic submission of returns, often with digital approvals rather than wet ink on every form. This reduces the logistical burden on cross-border directors while preserving control at the board level. When a local signatory makes more sense. There are situations where having a Canadian-based officer or director sign makes better sense. If the operational team and records are in Canada and that person has day-to-day visibility into transactions and compliance processes, they may be in a stronger position to attest to the accuracy of returns. In heavily regulated industries or sensitive audits, local knowledge and quick access to records can be crucial. A U.S. director can still be closely involved, reviewing drafts, approving strategies, and receiving updates, while delegating the mechanical act of signing to someone closer to the ground. Final thoughts. A US director can sign Canadian tax returns for a Canadian corporation, provided they are properly authorized and serving as a director or officer of that company. The law cares about authority and accuracy, not the physical address of the signatory. What does change across the border is the director's exposure to Canadian duties and potential liabilities if filings go wrong. If you plan for a US director to sign, make sure your internal authorizations are clear, your Canadian compliance processes are solid, and your advisors are capable of explaining the returns in a way that lets the signatory be genuinely comfortable. For more detailed guidance on director roles and tax filing responsibilities in cross-border groups, you can explore our website's governance and compliance resources. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.